October 1st, 1993. Warren Buffett just bought the US shoe manufacturer Dexter Shoe for $433 million. The company has a long history of profitability and it is notorious for its high-quality products. But what Buffett doesn't know is that in spite of the strong financial performance, things are about to get seriously bad. When Warren Buffett bought Dexter, there was one thing that he didn't predict, and that would change the entire shoe manufacturing.
We tried to compete. We had a good brand name, we had great workmanship, and we found out that it just plain wouldn't work against shoes produced in China.
93% of the shoes came from abroad, where extremely low-cost labor was the standard. In a desperate attempt to save Dexter, Buffett changed the management team with a seasoned leadership in shoe manufacturing. In the 2002 shareholders' letter, Buffett claimed that Dexter's business has been turned around, but in the following years, Dexter continued to be crushed by foreign low-cost competitors, leading to its inevitable failure.
No, nobody misled me on that in any way. I just looked at it and came up with the wrong answer.
Buffett lost the $433 million invested that today would be worth more than $900 million considering inflation. But to make things worse, instead of paying with cash, Buffett chose to pay with 25,000 shares of Berkshire Hathaway. Today those shares would be worth around $17.5 billion, making this one of the most expensive mistakes in his career.
I was very wrong in paying what I did and paying it in the manner I did, which was stock in the case of Dexter, for a domestic shoe manufacturer.
But this won't be the last time that Buffett makes costly errors. So let's see 5 other serious mistakes that made Buffett lose billions, starting with Tesco. Buffett started buying the giant UK retailer in 2006 when the company had a market-leading position in the UK and had plans to expand in the US and Asia. But things started going south in 2010 when the longtime CEO of Tesco abruptly left the company. His successor struggled to maintain a competitive edge, as in 2011 the company had declining market share and lower profit margins. But in January 2012, Buffett increased his stake in Tesco, showing a vote of confidence for the management. Still, this didn't help Tesco as troubles continued. By 2014, the company admitted that it had overstated its profits, raising awareness about the company's accounting issues. So what was Buffett's mistake? Well, he started having doubts about Tesco's management since 2013, but he didn't sell his entire position until 1 year later when the stock already crumbled.
I was late in recognizing that. They were doing certain things. I thought when they came into the United States, I thought that was a big mistake, but I did not anticipate that they would lose the position that they had in the UK.
This is proof that usually changes in management are important, as Berkshire took a $444 million loss. How one of the world's greatest investors could overlook such clear red flags is still a mystery, but what happened with the next investment would prove even more costly. It is October 31st, 2008. The stock market is growing and the price of oil is over $100. And Warren Buffett just made a bold move that would later come back to haunt him. He invested more than $6 billion into an oil production company, and while the company was solid from a financial perspective, there is only one issue with this investment. The oil industry is notorious for being cyclical, and most companies perform based on the price of oil. The higher the price of oil, the better a company will perform.
Essentially, when you buy into an oil production company, how it works out is going to depend on the price of oil to a great extent.
And by investing in ConocoPhillips, Buffett bet that oil prices will keep rising. But the only issue is that when he bought the company, the oil prices were here. And in just a couple of months, oil prices crumbled 70%. And Buffett's mistake was focusing too much on the short-term price increase rather than the long-term fundamentals of the industry. Buffett's mistake of buying at the top cost Berkshire around $2.7 billion. This is a powerful reminder that even the best investors can get swept up by short-term market trends. But ConocoPhillips wouldn't be the only time Buffett misread a rapidly changing market. Warren Buffett is notoriously reluctant to investing in technology companies. But in 2011, in a move that surprised even his biggest fans, he decided to invest more than $10 billion into IBM.
What means something is where the company's going to be in 5 or 10 years. And I think that IBM will be worth more money. But like I say, I could be wrong. If I'm wrong, we'll accept that.
Warren Buffett, who is a master at valuing stable, slow-changing industries like consumer goods or finance, was now stepping into the tech world, a space known for rapid innovation. However, Buffett underestimated how fast the tech landscape was evolving. As IBM struggled to pivot towards cloud infrastructure and artificial intelligence, competitors like Amazon and Microsoft surged ahead. Buffett later admitted that he overestimated IBM's ability to adapt. The company's brand power and history were not enough to save it from losing market share.
I was wrong in my original analysis. That's my fault. So 5 or 6 years ago, I thought that their prospects were going to be better in the next 5 or 6 years than they turned out to be, significantly better.
By the time he sold his IBM shares, Berkshire lost around $3 billion. This move showed that even the most experienced investors can miscalculate when they step into unfamiliar territory. But the next misstep comes in an industry that Warren Buffett knew well and that he once promised to stay away from. In 1989, Warren Buffett invested $359 million in airlines company US Air. Initially, things didn't go well, and it took 9 long years for Buffett to recover his money. Despite eventually making a modest return, this experience showed Buffett the truth about the airlines industry. He called airlines a death trap for investors, plagued by high costs, competition, and unpredictable demand.
Investors have poured money into airline companies and aircraft manufacturing companies for 100 years plus with terrible results.
That's why he swore he would stay away from this industry. And for decades he did so, until 2016, when he invested $10 billion into major US airlines like Delta, American, United, and Southwest. The airline industry was consolidating, with fewer competitors and rising demand, which would increase future profits. And the 4 companies that Buffett bought were the market leaders, so at the time this seemed like a safe bet. But then, in 2020, the pandemic grounded air travel overnight. Demand plummeted, and airlines faced financial ruin, which of course led to the stocks crumbling. Though exact figures are uncertain, estimates suggest that Berkshire sold and lost between $5 to $7 billion, and that's how we learned that some industries are vulnerable to external shocks that not even the greatest investor of all times can predict. Lastly, let's examine one of Buffett's biggest acquisitions ever, a $37 billion bet that didn't turn out as expected. In 2016, Warren Buffett acquired Precision Castparts, a manufacturing company that supplied parts to the aerospace and energy industries. He believed that Precision Castparts had a durable competitive advantage because of great leadership and long-term contracts with major manufacturers like Boeing. So this seemed like a pretty safe bet on the future of air travel and energy. However, the timing was again off, because in 2020 the aerospace industry began to struggle as demand for new planes declined. Precision Castparts had overexpanded, and the company's heavy exposure to energy markets made things worse when oil price dropped. The company fired 40% of its employees and profits crumbled. Buffett admitted he was simply too optimistic about Precision's profit potential and that he overpaid when he bought the company. As a result, Berkshire wrote down a $10 billion loss. This is another proof that even when investing in a market leader, there is a risk that the industry is cyclical and that periods of high growth don't last forever. To sum up, we learned to act quickly when obvious red flags appear, to not get tricked by the short-term price action, to keep in mind that some industries are more cyclical than others, and to be very aware of risks when investing in an industry that we don't know well. But the biggest lesson Warren Buffett taught us was about humility. He doesn't shy away from admitting when he's wrong, and he turns those mistakes into valuable lessons for the future. And I personally will try to do the same in my investing journey. That was it from me. If you want to see what industry Wall Street hates but Warren Buffett can't stop buying, you can watch this next video.